Hey folks, Dan Frio here with your rate update for September 29th, 2023. Where in the heck is this year going to? So here's where mortgage rates ended yesterday. They are down 5 ticks from where we were the day before. So I have even more good news for you guys today. So let's get over to it. Well, the first thing I want to go through with you guys is I posted a new video up here and it's not getting as much traction as I thought it would be. It's how you can buy a house with 1% down using the 2-1 buy down program as well. Let me explain it real briefly with you, and then I'm going to put that link to this video up through here for you guys to check it out. We have a first-time homebuyer program that's not only requiring first-time homebuyers. Most people do qualify for this program, believe it or not. It only requires 1% down in this market. Now, there's more to this than meets the eye on that. One of the big things that this also does for you is it reduces your payment in 2 ways. One, it doesn't require that you pay PMI. So just for those out there that's never bought a house, what happens is if you don't put down 20% when you're buying your first house, you need something that's called PMI. Okay, it usually equates out to about $100 per 100,000 that you finance. So in this market, we're seeing most people are priced in the range of about $250,000 to $300,000. So that might be able to reduce that monthly payment for you for about $300. But then I'm teaching you in this video how this 2-1 rate buy down works. So if you're negotiating with a buyer, seller, or you're negotiating with a builder, this is a fantastic program to use. This is what most of our clients are going with right now. We'd love you to check that out. So check out this video on my channel. I'm going to put that link to it right up through here. So without further ado, let's get over to the news that we have today. First off, I want to give my condolences to the Feinstein family. She was a representative out of California for years and years and years, and she passed this morning, so our condolences out to her. But on the good news is we have inflation finally starting to crack, where you can see right here, the Fed's favorite inflation indicator rose less than expected in August. Let's go through the economic calendar to explain this to you. So what we're going to right now is the economic calendar we have for the week. So what I want you guys to understand is the economics that are basically making the markets do what they're doing. Okay, so what we look at here is what's happening in real estate. Most of the things that are affecting real estate, because that's why you're watching this channel. So in today's report, we have the PCE. Now, the PCE is the main primary inflation gauge that the Federal Reserve watches, and it came in right here, folks. So you're going to notice 2 big improvements that we've had. The core PCE month year over year, which you're seeing on the top level, the previously reading was 4.3. We've been over 4% for the past 2 years. Well, now we finally cracked down to 3.9%. So that's a milestone right now that we're seeing. But then on the month over month numbers that we're seeing, the number was supposed to come in at 0.2 as expected right here. The previously reading was 0.2. It actually came in at 0.1. So these numbers are looking fantastic. I'm going to show you where the markets are going next. But let me just summarize what we're seeing so far this week in the economy. You tell me if this is a robust economy or not. The first thing we want to come out with is on Tuesday. We have building permits. Building permits previously were 1.443 million. They came in this week, this period at 1.54, which is good news because we need more houses being built. But here starts the cracking in the foundation of the economy. Right here, the consumer confidence. Last reading was 108. The expected 105. It came in at 103. I don't know about you guys, but I am not confident at all about this economy. I think inflation is going to continue to go, into the end of the year. And then based on what the Federal Reserve has done, I think we might see a complete crack in this because we have a ton of debt out there and the Federal Reserve is pushing rates to unprecedented levels we haven't seen in 30 years. And it's going to cause ramifications throughout the economy, especially the stock market and job numbers. And those are to come. The next thing we have is core durable goods. This is how many products people are buying on a big level. Like, are you buying a washer and dryer? Are you buying a refrigerator? Well, this number previously came in at 0.1. It spiked to 0.4, mainly because of the Ukraine. What's happening is we've sent over a lot of equipment to Ukraine, and now we're trying to replenish that. So our government is buying these things, and that's added into the core durable goods orders. So that is basically what caused that spike. Crude oil inventories, we're not going to talk about that in this video. And then GDP. Now here's where we're starting. GDP is how much production we're getting out of the US. Previously reading was 2, came in at 2.1. So that means production's up there a little bit, but let's continue to go forward. We have unemployment claims. This is the first time somebody's filed for unemployment. Last reading was 200,000. came in at 204,000, a little bit higher than the last reading, but a little bit lower than expected. Then you have, here's where it really starts to crack. And kudos to the Fed, because they told us a year ago, we plan on crashing the housing market and the job market. Well, the housing market, here it is. Now, these are sales. Sales previously were up 0.5. They were expected to retreat back to negative 0.8. They fell off a cliff. They completely fell off a cliff at 7.1. Okay, and then we have the core durable goods that we're seeing right now. So based on this information and everything else that we had, what's the bond market looking like right now? So the bond market's teetering up and down. It's basically flat right now. It opened the market up about 30. You can see right through here on this scale. So we opened up, we spiked up, and then there was more profit taking maybe and just limited trading right now. And that's bringing it back down to basically par levels, meaning it's really no adjustments there. So that's what we're seeing on the front right there. But what I want to get to lastly is if you're interested in trying to buy your first house during these times. Now, if you're in like West Virginia, Pennsylvania, Ohio, Indiana, Michigan, Arkansas, Oklahoma, you're still seeing appreciation in homes and they're still affordable, believe it or not. So if you're out there and you're like, Dan, how do I qualify? What can I do to maybe get involved with the 2-1 buy down to get a better rate? You know, how can I get involved to see if I can come up with only 1% if I'm looking to buy a house? Well, there's 3 ways to do that. The first is you can hit the apply now button. How that works is you hit the apply now button, you're gonna have a series of questions. The reason why we ask you those questions, we wanna assign you to a specialist on our team that is basically the specialist in the area that you're looking for. Are you looking for an FHA loan, a USDA loan, a construction loan, a home equity loan? Those are the things that we want to make sure you're set over to the right specialist. But if you're out there and you're like, Dan, I need kind of immediate assistance. I really would like to see a house this weekend, see if I can get pre-qualified. Well, do me a favor, scroll down to the bottom. And you're going to see 2 things here. One, the first thing is you can give us a call. There's an 800 number. It is right through here, 844-775-5626. Or if you'd like to just reach out to me personally, I would love to work with you personally. Just send me an email at dan@therateupdate.com. So thank you so much for watching, guys. I hope you found value in my channel. If you did, please don't forget to subscribe down below. God bless. Have a fantastic weekend. See you next week. Bye-bye.